Let's get a perspective on gold from someone who has boots on the ground and is no stranger to the industry. He's the founder and former CEO of Goldcorp. He's now the CEO of his own mining company, McEwen Mining. It's a mid-tier gold and silver producer in the Americas. He joins us today in studio, Rob McEwen. Good to have you back on the show.
Great to be here, Daniel.
So excited to have you on. We're going to talk gold. We're going to talk McEwen Mining. Let's start with your company, which just put out results. You had a record production a few weeks back. How are miners dealing with the lower gold prices, lower gold and silver prices?
Looking for ways to bring your costs down. There's a lot of rationalization of expenses going on, deferral of exploration and other projects. In our case, we were able to increase our production. The grade was better as well. So it really expanded, and we've been innovating at site to lower our operating costs.
Right. So what are your all-in sustaining costs?
All-in sustaining $914.
So how do you manage to bring down that cost?
Good luck. No, it was the increase of production and improving grade and some innovations. Well, I won't call them innovations, improvements in our efficiency.
So McEwen's been in the news quite a lot. We've been covering you on Kitco News, and you had the robbery back in April at the Gallo Mine in Mexico, which I visited and I toured with you. Has that changed your thoughts on mining in Mexico?
It hasn't changed it. You just have to be a little more sensitive to local community and developments. Subsequent to our robbery, we consulted with Brinks and we built a new refinery and storeroom, and it's now, according to Brinks, the state-of-the-art in Mexico. So you have to have better defenses.
Are you eyeing any other jurisdictions that you would like to be mining in?
We're permitting in Nevada right now, our gold bar property. I'm waiting for Argentina to change with the election. But I'd say the United States is a favored place, and Nevada is a favored place.
We've been hearing it that mergers and acquisitions is a theme that we'd see in 2015. We saw a bit of it. Are there any companies you're eyeing?
We're looking at a number. We've been conducting due diligence visits on a number of properties, but we haven't stuck the pin in yet. It seems initially they look attractive, and then as you peel back a number of layers, you find, well, maybe there's an environmental problem, maybe there's a royalty or a metal stream that's a little heavier than what it was, or just the reserves aren't going to be able to be expanded that quickly.
Rob, you and I have had a lot of conversations about innovation in the industry and trying to push boundaries in the industry and what could be done for mining. What do you feel really needs to change?
One would be, how can we find the deposits faster and define them? How could you update your deposits relative to the marketplace? The other is looking at our costs, our processing costs, and saying, let's not look for a 5 or 10% reduction. How do we change it by 50%? Now that might seem really radical, but I'm sure there are other processes out there that we could incorporate from other industries that would allow us to dramatically drop our costs, because we have to operate in an environment where the price is significantly lower today than it was 4 years ago.
How about from a technology standpoint? I know you've said, well, you'd like to make mines that, once they run their course, maybe transforming them into, playgrounds or resorts or whatnot. Tell us about some of those ideas you have.
Well, that's after you've mined the area, how do you rehabilitate the land? And in our case in Mexico, we're going to have a large hole. It's going to fill up with water, so there's an aquatic center. You could create terraform and create something along the Mexican heritage of an Aztec temple. You could have bike, tennis, soccer, create a sports center that draws people from around the country and also provides employment for the people that are there and gives them skills that are very transportable.
We're about to start a new year, 2016. What do you feel the mining industry will continue to face next year? What challenges?
There was just a large tailings break in Brazil, so skepticism about the benefits of mining to the country will reign very high. The price environment, and that's not, the capital markets are basically dead for the industry right now, so how do you keep sustaining, how do you put new projects on? And I think investors will start looking and saying, you know, there are not as many mines being built, and those mines that are being built are producing less. Maybe we're going to end up with a shortage of certain gold and silver.
Let's talk about price. You've been a big advocate of gold. We all know you've been calling for $5,000 gold. You know, we saw gold really struggle last week after the jobs numbers. How do you see the price environment set up right now?
No one's paying any attention to it. You know, in this market, people are looking at the gold price going down. But if you're in Australia, you're in Europe, you're in Canada, the price has been going up because of the foreign exchange.
Right.
So I look back to 2001, and gold was $250 an ounce. By 2004, it had moved to about $400 an ounce in dollar terms. But in most other currencies, it hadn't moved much. And then in 2005 beyond, all the other currencies caught up to the dollar, and gold kept going higher. Right now, we have the inverse of that, where gold's going up in other currency terms, but not the dollar. And at some point, it's going to move in dollar terms as well.
So for the time being, do you suggest that investors buy gold in euro or yen terms instead of US dollar terms?
No, I think they can buy it in any term they want. Buy it in a dollar. It's cheapest in the dollar right now.
So what makes you still bullish on gold heading into 2016? Which factors do you think will move the price higher?
Same reason as before. With interest rates at close to zero, everybody's believing you can take on as much debt as you want. At some point, rates are going to move up, and it's going to be harder to service that debt. The monetary expansion has been massive, and all you have to do is look through economic history to see that when you expand the money supply by the degree that the Fed has and the European Central Bank, nothing good comes out of that in the end. People say there's no inflation, but take a look at real estate, take a look at the stock market, take a look at high-end art. All those are manifestations of huge amount of cheap money coming into the system. So I think it's prudent for anyone with a good performing portfolio to start saying, maybe I should put a little bit into gold right now. It's very cheap. Think of it as 80, 90% off when you're walking along looking for a sale. And it is value. You can turn gold into cash in 2 days.
Rob McEwen, thanks so much for stopping by. Thank you.
Thank you, Daniel.
And thanks for watching this edition of the Gold Report. We'll see you tomorrow.